Hey, Sarah.
Hey, John, how are you?
I'm well. How are you?
Good, thank you.
This is the first time I've put a blazer on or sport coat on since March.
Really?
I thought I'd be fancy today.
We appreciate the extra effort, John. Thank you.
Well, Dylan, I think you had a jacket on yesterday. You got me kind of thinking about it. Maybe you didn't.
I did. I have to admit, I had a jacket on. I can't remember the reason. And then when I saw Stevie had a suit on, and we both lamented the fact that our dry cleaners are probably struggling at the moment because nobody's wearing suits.
Right.
Yeah.
So it's like we have to sort of make an effort. I think I'm going to get overdressed for everything now in my own house, which should make things plenty messy. Right, exactly.
Yeah, no, though. But you say that, but our dry cleaners cut down to 3 days a week. Like they just didn't have enough business to be open, and we're like model customers, jackets and shirts and everything else, and yeah, we've done nothing.
It's tough. It's definitely a tough business to be in right now. It's going to be interesting to see too, like what that does for brownfields. I think thinking about along those lines, like, are there going to be available dry cleaner spaces for development? I guess at some point. I don't know. I guess we'll find out.
Well, hopefully enough people are, doing their Zoom wardrobe that need to be cleaned once in a while. So
Right.
It won't be enough, but hopefully it'll be fun.
Blazers, but no pants. Yeah, exactly. Right. Let me see here. All right, let's wait and see what happens. We have, I think, about 25 people, give or take, signed up. So
Wow.
we should be, I don't know if they all have to get let in or not.
I think people are dying for something to. Oh, sorry. Go ahead.
I was just gonna say, it usually takes a few minutes for people to log in.
Yeah.
No, I was saying I think people are dying for something to do. I mean, I think without COVID, people probably wouldn't be all that excited about a webinar, but just to have an hour or something different and maybe interesting.
Yeah.
Mm-hmm.
I also just noticed that when I opened up the participants part, there's a raise hand function. So I don't know.
That's
I'm going to
helpful.
click it and see what happens real quick.
Oh, your hand's raised.
Nothing.
Your hand's raised. I see it.
That's so exciting. Yeah. All right, now I'm going to lower my hand.
All right. So
Oh my God, my old colleague, Benny Wong, is on. That's fun. I used to work with Benny at Mass Development, which is the Massachusetts PACE program administrator.
Oh, nice.
Yeah, we were in the same office.
Today, do you want to start sharing your screen now, just to get the title page up? And
Yeah,
then what
sure.
I'll do is I'm going to try to make sure that everybody has the ability to unmute so that they can all chime in at the end and ask questions. Yeah, we're good.
Get it to the beginning.
This looks great. This will be really easy to navigate, Dylan and Denis.
Okay, so more people coming in. Let's give it a couple of minutes. Hi, everybody. Thanks for holding. We're just going to give it a couple more minutes so that everybody can join in before we get started. So maybe another minute or so.
Hey, Dylan, can you send Steve the meeting link? Because my screen's the main screen. I don't want to hop off of it.
Sure. Was I registered? You have to register. Did you see it? You got a phone number for me that I can phone in on?
As well as providing a community benefit of reducing emissions from their buildings as well. And the financing is used for permanent improvements. So the assessment that secures the repayment runs with the property. So if the building owner isn't sure if they're going to sell their property at some point, they might hold off on making these types of energy improvements. But with PACE, they can move ahead with it because the repayment doesn't accelerate. The next owner would continue paying future installments of the assessment. Next slide. Oh, and also just to add that because it's an alternative source of capital, specifically for energy saving measures, building owners can hold on to their existing capital for traditional business needs or reserve their existing lines of credit for other business needs. because they now have this alternative source available. And so, as I said, the overall mission of PACE is to reduce the emissions from the building sector, but it's also a valuable economic development tool. So PACE can be used to fill a funding gap in the capital stack for a project. And because it's lower cost than other sources of capital, it can reduce or remove the need for more expensive mezzanine or equity debt. And because it's secured through this assessment on the property, the repayment can be passed through to tenants on triple net leases. So those tenants are benefiting from an improved building and lower utility bills and more comfortable buildings, and they also can repay the charge that is financing the project. And so the overall benefit to the community, as well as to the developers and building owners, is that this is facilitating an improved building stock. So there's a lower source of capital now available for higher levels of efficiency or to include renewable energy in your project. So it motivates building owners and developers to include those types of measures that might otherwise be cut from the construction budget. And therefore, it's just providing a means to achieve a more competitive building stock that tenants look for, if they're interested in eco-friendly buildings, as well as buildings that are just less expensive to operate. Next slide, please. PACE can be used for any building type. It just has to be owned by a commercial entity, and that can include not-for-profits. As you can see, it really runs the gamut across building sectors. The only types of buildings that would not be eligible are residential buildings with fewer than 5 units in the building, as well as anything that's owned by the municipality, because it is secured through this lien on the property. Next slide. There's also a broad range of energy measures that can qualify for PACE financing. Here you see a list of categories under energy efficiency, as well as renewable energy. And these are all governed by the New York State Energy Research and Development Authority, or NYSERDA. So they have what's called their commercial PACE guidance, which outlines how a project can qualify for PACE financing. And these can be done through a comprehensive whole building approach. It can also be done through single measures. So, if an owner is looking, they know what piece of equipment is going to be aging out very soon, they can use PACE for that single measure, or for emergency repairs, as well as for more of a whole building energy retrofit. And you may be aware that many of these types of measures can qualify for incentives, either through NYSERDA or the utility program. So PACE financing can be used to finance the project net of those incentives. Next slide. So until this past September, PACE in New York could only be used for existing buildings. But that was holding up a lot of projects in new construction. We saw a lot of demand for PACE to get new construction projects moving forward. So the state legislature adopted an amendment this past September. And so now PACE financing can be used for energy efficiency in ground-up new construction, as well as gut renovations. So the NYSERDA's guidelines have been updated to reflect how a new construction project can qualify for PACE. So they basically list certain standards that would have to be met to qualify for PACE, whether it's the New York Stretch Building Code, Passive House, Energy Star, or LEED certification standards. And the process for approving the project, it's the same whether it's new construction or an existing building. EIC has an independent engineer that reviews the scope of work and either the energy audit or the renewable energy feasibility study, and make sure that it complies with NYSERDA's guidelines. So that's just to ensure that any project that is using the public benefit of PACE is adhering to those standards. And just want to point out that the term of the financing, as I mentioned, cannot exceed the expected life of those energy improvement measures. So that's something our engineer looks at when reviewing those calculations. Next slide. OpenSea PACE is an open market commercial PACE program. So we have multiple capital providers who are participating. This means that there's more capital available to deploy for these types of improvements across the state. It also means that building owners and developers have a choice. You can shop around, talk to multiple providers, see who can provide the best rates for your project. And these are really, the capital provider is really going to be your partner in moving the transaction forward. They work with you to compile all the transaction documents and submit it to EIC for approval. And also, these are all listed on our EIC's website as well, which includes links to their website. So you can really get a view of the types of projects that they financed either in the New York program or in PACE programs across the country. Next slide. So once you're ready to start your transaction, you would apply directly to one of those capital providers. There are certain underwriting criteria that are in the local law that enables PACE financing. And EIC reviews the application to make sure it adheres to those criteria. There can't be bankruptcy. The property owner must be current on property taxes and mortgage payments. And we do require lender consent if there's a mortgage holder on the property, because the PACE lien is senior to any non-municipal liens. And as I said, we review the project application to make sure it does adhere to NYSERDA's guidelines. And then once those criteria are met, you would then enter into a finance agreement with the capital provider. And then EIC, as program administrator on behalf of the City of Troy, we would record the lien that secures the financing on the land records for the property. And then EIC also handles billing directly with the property owner going forward. Next slide. Oh, I thought I had more.
Are we missing a slide over there? Not a problem. 2 seconds. If we're missing a slide, what we can do is we can send them out. Is this
sure, it's not a problem. I covered the basics of how the program works.
Oh, I think this is this the slide? Is this the slide that you're looking for?
No, there's one or two following this one, but I can just summarize. It's not a problem. Just to say that just to reinforce the fact that the financing is secured through this lien on the property, it is junior to municipal taxes. And if it's divided up into annual installments. So if the property owner does not pay an annual installment for the PACE assessment, the capital provider does have the right to enforce the lien, following the same process of foreclosure that the municipality would follow for delinquent taxes. And because program has been designed in a way that it doesn't place any burden on the municipality to offer it, and it's also a much more streamlined process for property owners with more access to capital. We've seen a growing interest across the state. We now have 57 municipalities who have adopted the program, and so far there's been over $21 million financed clean energy improvements since we launched last year, and we're excited to see more projects in the future, and looking forward to working more with property owners in Troy. And I can stop there. Thank you so much.
Thank you, Sarah. So just real quick, do you have what are the other capital region municipalities that have enacted CPACE legislation?
Albany County has, and I should bring up my map right now.
Not to put you on the spot, sorry.
Albany County, that's okay. City of Saratoga Springs, City of Glens Falls, Columbia County, Warren County, I think that's in your region.
Can they? Is there a website they can go to get more information and to see some of the other municipalities that are up there?
Yes. Oh, and I'm sorry, and the City of Schenectady as well. Yes, you can go to eicpace.org, and there's a page on our website that lists all of our participating municipalities so far, and we update that each time a new municipality enters the program. And we also have a list of a page that shows completed projects, and one of those is within the City of Schenectady if you want to look at that one.
Awesome. Thank you so much, Sarah.
Thank you.
To everyone, I hope you reach out. We'll put Sarah's information up as well as John's at the end of the, I think it's the last slide, while we're taking questions. And hopefully you reach out because they're both a wealth of knowledge and absolutely tremendously helpful because it's a really exciting project, or program, I should say. But I understand that it's a little bit complicated and that understanding how the mortgage works and the subordination with the lien works as well. So all these types of things can get discussed later on, but I definitely encourage you to reach out to Sarah directly to talk about that. Next slide, please. So John Kelly is a VP of Business Development with St. Louis-based Twain Financial Partners. In his role, John is responsible for sourcing opportunities utilizing the company's historic tax credit, CPACE, and ground lease capital platforms. Based in Boston, John has over 25 years experience in commercial real estate finance, channeling capital to underserved communities while driving growth in commercial finance and nonprofit sectors. Prior to joining Twain, John was VP of Commercial Lending with Mass Development, the Commonwealth of Massachusetts quasi-public economic development agency. The agency is also the program administrator for the Commonwealth CPACE platform. Previously, John spent 7 years in Washington, D.C. with the Capital Impact Partners, a leading nonprofit community development financial institution. As Director of Business Development, he led a team that launched national initiatives to increase lending activity in underserved communities, targeting projects that provide better access to healthcare, education, senior care, affordable housing, and healthy foods. Prior to joining the nonprofit arena, John spent 13 years as a vice president of Bank of America's pioneering community investment group. John, thank you so much for joining us. With that, I'll give it to you.
Great. Thanks, Dylan. I want to thank Dylan and Denise for helping me today and inviting me to be here. This is the second time I've sat with Sarah Smiley on a panel, so that's always a pleasure. Twain does a lot of PACE work all around the country, and people say, what's one of the key ingredients of having a successful PACE program? And having a good relationship with the program administrator, from my perspective, is really important. And it must have been a year ago that Susan Worth and I had lunch from EIC, and ever since then, I have the ability to pick up the phone and call Sarah, call Susan, and ask questions, run ideas by them, ask if accommodations can be made. And so it's a great relationship, and we're looking forward to doing more work here in New York. I need to see the slides, Dylan, please. Okay, so just to give you a 2-minute overview of who Twain is, Twain actually has a rather interesting history. We've been around for 7 years. We're a spinoff of U.S. Bank's Community Development Corporation. And U.S. Bank CDC is a huge new market tax credit investor to the tune of hundreds of millions of dollars a year. And 7 years ago, the bank made a decision to spin off all their new market tax credit assets into a separate non-related company. And so they did that and turned the company over to 2 executives from the CDC. So since that time, probably half of our business is still managing U.S. Bank's new market tax credit assets, but we've also branched into historic tax credit investments. We've been doing PACE for 4 years, and we recently rolled out a ground lease capital program this year as well. We call ourselves kind of non-traditional lenders. We're not the senior lender, we're not the primary lender, but we do smaller loan pieces that kind of augment the capital stack. Next slide, please. So just to give you some idea of what Twain is up to, we're a national company. We've lent in just about every state that has a PACE program so far. We have not done any in New York yet, but not for lack of trying. We've actually looked at quite a few projects. We have some term sheets out for some pretty large projects in New York State, the Hudson Valley, Poconos, Western New York, around Buffalo. So we're excited, but we've done quite a lot of PACE lending. Massachusetts just launched their program, and as Dylan said, I used to work for Mass Development, who's the program administrator. So, and I'm based in Boston, so it's a natural fit for us to do some more work here. So we're excited for that. Next slide, please. So these slides, we have done no deals in New York yet, so I'm totally piggybacking on our success in Rhode Island, just to kind of give you a sense of what is possible with PACE and what we've been able to do. And we were very fortunate. We have a great program administrator in Rhode Island, and we were able to do three projects this year. So I'm going to tell you a little bit about those projects just to give you a flavor. But from Twain's perspective, there are really no asset classes that we won't do with PACE. We've done multifamily, we've done senior living, we've done warehouses, we've done self-storage. Really, you know, as long as they're not those obvious businesses like casinos or sin businesses or something, you know, PACE will fit in with just about anything. We've done new construction, we've done a lot of adaptive reuse. I mentioned that we're pretty big historic tax credit investors. What's nice about working with Twain, if you have an old building, is that Twain is very experienced pairing HTCs with PACE, and they fit very nicely together, and you can really save yourself some expenses by bundling it in one place. But we often find that if somebody comes to us looking for HTC investment, we can often encourage them to consider PACE as well. Next slide, please. Oh, and by the way, in hospitality, I should mention, in COVID right now, oddly enough, hospitality is a really great fit for PACE. We're doing quite a few loans, not new construction so much, but a lot of refinancing of PACE, of existing improvements that have been made within the window of time that you can do that. And you're able to take that money, pay down your senior debt, capitalize a couple of years of payments, and some lenders are looking at that as being a really good way to kind of bridge the hospitality industry until times get better. So the first project I wanted to talk about was this 580 Water Street in Providence. And this was a developer who had never knew much about PACE before, but he knew somebody at Twain and just called and said, you know, what are you guys up to? And he was building a new construction project in downtown Providence. Established developer, second generation, really skilled, good with their money. And they were able to, you know, borrow $2 million under the PACE program using a local bank who agreed to the provisions that, you know, PACE requires. And the building is just about completed, and it came out, you know, beautifully, and it was a really good use, and the developer was able to add a lot of energy improvements. It's near some of the colleges in Providence, and the developer felt that by making some of these improvements, he could kind of tout the building to the younger people who are going to be renting there as this energy efficient building. He thought it would not only would it save him some money over the course of the long haul, which is his intent, is to hold this property, but he thought it was a really good marketing tool to be able to say that this was a building that was financed in part by the PACE program. Next slide, please.
Sean, could you just hold on 2 seconds? We're gonna have to just reload this picture because apparently we're having issues. I'm sure.
Yeah, no problem. Hey, while I have the floor, let me just say hi to Benny Wong, who's on this call. So Benny Wong works for Mass Development. Benny and I had an office side by side until about 1.5 years ago. And Benny's a good guy and a good friend of mine. And I didn't know he was going to be on today. So I'm happy to see that he's here.
So are you able to pull it back up again? Hopefully that message should be gone.
The message is
Yeah,
gone.
I don't know what happened with that. It was really strange. So if it happens again, I might just stop sharing my screen and then go right back to it quick. Hopefully that helps. So I'll go to the next one.
All right, thank you, Danae.
Yep.
So this project actually has an interesting basis to it. So there's a developer called CV Properties based out of Boston, and I actually had done a deal with them in Boston when I was working at Mass Development, and just by pure happenstance, I happened to connect with them, and they were building this brand new construction hotel in downtown Providence. And we're game to try to figure out how to make PACE work. And they really are using this project as kind of a trial run. They could have qualified for a lot of PACE, probably more than $10 million worth, but they really didn't need it, and they just wanted to see how the program would work. So they became at a number that worked for them of about $5 million worth of improvements. And by having this available, they were able to get some lower cost, long-term fixed rate money to do some capital improvements. They were able to make some additional improvements that maybe they wouldn't have otherwise if they didn't have access to this kind of capital. It was a big project, $60 million. timing wise, it actually is working out okay for them. Because of COVID, they had access to, once construction was underway or got back underway, they were able to have access to tradesmen and different types of workers that they might have had to wait for otherwise. So the hotel is, I saw pictures a few days ago, the hotel looks to be, the whole envelope is done. All the interior work will be underway through the winter, but when it's done, it's going to be a great hotel, 175 rooms. It's got a restaurant. It's right downtown. It's near all the colleges, and it was a really nice use of PACE. I like talking about this project just because it was a great development team. It was a local lender who was happy to work on this with us. This developer, was actually quite lucky. They had such a good track record and so much credibility with the lending community. They were able to go to 3 different lenders who provided term sheets and say, great, we like your deal, but we want to use PACE. And so whichever one of you will let us use PACE, we'll go with you. And it turned out all 3, were able to get comfortable. So they had a choice, but really, really nice project, really nice use of PACE. Next slide, please. And then this is just, I'll just talk about this really quickly. This was just interesting from this perspective. This is a hunting lodge for wealthy people in the middle of Rhode Island on 1,500 acres. And they got to the very end of construction right when COVID hit, and they ran short of money by a bunch of, by $6 million. And they really didn't know how they were going to fill that gap. So we were actually able to kind of retroactively give them $6 million for improvements they'd already made. The building that you're looking at was actually largely done. It didn't look quite as pretty as this, but it was pretty close to done. But they took that $6 million and were able to roll that money into the rest of the project. And so the project got completed. It just opened in October. And with COVID, they actually had a fantastic year. It's a place where you bring your whole family and you can hunt and do all kinds of things. And so this was an unusual use of PACE, but it worked out really, really well for them. Next slide, please. And then I just wanted to, I put this slide in, this is in Texas. And so it was just I used this slide because it was the coolest building that I had to feature, but this was just an old building in downtown Amarillo, Texas. And so this was just a pairing of PACE with HTCs. This one is similar to the project, the preserve that I just mentioned, in that this actually did 2 tranches of PACE. So we did an initial tranche of $7 million when the building first got underway. And then right as the building was being completed, they were also short on money. So we did a second tranche of $900,000 of PACE financing, retroactive, that allowed them to complete the project and open. Next slide, please. And then just to give you a little color, I guess. I mean, so PACE is a piece of the capital stack. So on these big buildings, Twain will let you go up to 25% LTV on the PACE loan, which is the first loan on the property. We're finding, before COVID, we were finding that lenders would let us leverage that PACE financing a little bit. So meaning if we were going to put in $5 million of PACE, the senior lender might reduce their loan a little bit and then let us do the rest. But now what we're seeing lately, and I don't think this will last forever, but we're seeing that a lender is saying, well, fine, if you're going to do $5 million in PACE, that we're going to come bring our loan down by $5 million. So PACE, has to, in these senses, make sense. It has to be a good alternative price-wise to mezz debt or preferred equity. We are pricing these loans right now at 5.5%. Fixed for 20 to 30 years, depending on how long the improvements last. But I like PACE. I think it's an innovative program. I think when it works really well. And it's finding the right fit. It's getting lenders who are comfortable with PACE. I can tell you that in the 1.5 years that I've been doing this and talking anecdotally to my colleagues, I've only had the experience of one lender handing me the signed consent without a conversation. And that was the Preserve project. Every other project, it takes conversation. So we often will say to our clients, let us have a call with your lenders, have all of us at the table, we'll answer questions, we'll explain how it's going to work. And more often than not, we get the lenders, to where they're okay with it. It sounds weird when they first hear about it, but once they understand it, it seems to make sense. So we've had very good success in that regard. And yeah, I guess that's it. I'm happy to answer questions as specifically as you'd like.
Thank you so much, John. So I'm going to open it up, and the way I'm going to actually ask that we all do this is there's a function there in the participation tab, and you can actually raise your hand, or I believe everyone has the ability to unmute themselves. And so if that's the case, go ahead and try to unmute yourself if you have any questions. If you're having trouble with that, either send me something in the chat function just in case. But otherwise, if you have any questions, go for it. While we're waiting for that, John, I have a question. At what point do you prefer that people engage you in the process? And the same is for Sarah as well, because I know that you're probably getting a lot of people who come to you after they've already tried to speak with their bank about this, and maybe they're just a little bit short in terms of the capital stack or something along those lines. When do you typically like to become involved in these projects?
You can go first, Sarah.
I mean, for us, it's not, I mean, from that perspective, it's sort of more of a question for John in a way, because we're not the ones having a conversation directly with the senior lender in the project. So, from our perspective, as long as it's within the window of, if it's a retroactive financing, within the applicable window to finance it, and as early as, I guess it's always as early as possible to get the documents to us is the right answer. Once the senior lender gives consent, that's when we can start having our engineer review the project scope documents. So it's kind of like the first, hurdle that needs to be reached. We have an initial application on our website. We just make sure that the property meets the underwriting criteria in the local law, that it's eligible. And then after that, it's really a matter of getting lender consent. And then once we have that and all of the scope of work documents, we can move things along really quickly.
Yeah, and I'm happy to have conversations really early with people. I think sometimes when I get calls from folks, they get my name, they hear about the program, and so they go to the EIC website or somewhere and they call us. We can at least, or I can at least on a first phone call kind of explain what PACE is, what it looks like. I can help people do a really quick back of the envelope gauge of how much PACE they might be eligible for. I don't have a big pool of lenders who've consented that I can always draw from, but I can at least tell folks that we're finding that smaller local banks are much more inclined to work with us on PACE than some of the big regional or national banks. So yeah, an initial conversation I'm happy to do. I find that the process on PACE it's measured in months, not weeks. So somebody might call me and ask me some questions, and I might not hear from them for 3 or 4 months, and all of a sudden they're back on board and their plans are underway and their building permits are happening, and then we go from there, and we already have a relationship established.
Thanks for that.
Sorry, and just to add to that, John, you made me realize that if someone's not sure of who they want to work with yet, and they just have questions about the program, then definitely reach out to EIC, and we can explain how it works and direct them to the capital providers, and then someone like John would take it away until it's ready to bring back to us.
Yeah, and it's an open market, and it's competitive. I mean, we compete for deals, and sometimes we get them, sometimes we don't. Twain, for example, has a $3 million minimum on PACE loans, but in the last week, I've sent 2 different deals to Greenworks, and they were happy to take some smaller deals from us, and we were happy to share. And we've done some joint deals on really big PACE deals with some other lenders. So yeah, I mean, it pays to talk to a bunch of lenders and see what they're up to, see what their appetite is, see what their pricing looks like.
That's really helpful. Thank you. Just to respond, someone asked about the slide deck. We'll share the slide deck with everybody that registered, and we're also going to hopefully put the recording of this up on our website as well. We'll have more information about that, but it will be on the Troy's Economic Development website. We'll put up, as we do more of these webinars, we'll have more of these up for everybody to take a look at whenever you need. Brian, it looks like you've got a question. If you want to unmute yourself, go for it.
Yeah, sure. Thanks, Dylan. Thanks, everyone, for the presentation. Dylan's familiar with the project that I assisted the buyers, who happen to be personal friends of mine, acquire a number of properties that were formerly owned by a church entity. So there's multiple parcels, and there's going to be multiple, projects amongst these different parcels. So how how would find, and I do believe that the project is, it's a historical church and ancillary buildings. Obviously, we're going to pursue some historical tax areas to preserve as much of the, the character and so on. So can you describe a little bit, like just using churches and rectories and those types of buildings, like how would the two pieces of HTC plus some of the infrastructure, CPACE type improvements that would qualify, how would those work hand in hand? You know what I mean? When we're dealing with structures that, let's face it, were designed more for their appearance rather than their energy efficiency. So how would those two things work together? I mean, glazing of windows is obviously going to be a huge thing. Is there some give and take as far as making historically appropriate accommodations to get the historical side, but also having those, you know what I mean? Are there adequate vendors out there, for instance, will deliver a product that meets both those criteria?
Yeah. So Brian, just so I'm clear, so this is like a multi-building thing. So like maybe you'll do the main church building first, and then like do the rectory second, and another building third, that type of thing.
Actually, swap that out. The rectory and another building are going to be the first to fit up, because they are by far the easiest and of the lot to get turned around quickly. The church is the more difficult of them because there's so many options out there as far as what to do with them. But, there might be some efficiency as far as improvements to sharing systems among them, for instance, is an idea I know that's been kicked around. But so that's the answer.
Okay, that's a good answer. So, but there's no easy answer to it. With the HTCs, it really will depend on what your HTC consultant is going to advise you to do. And I have some experience doing multi-building projects like that. You may have no choice but to do all the HTCs for the whole complex initially. So you may have to kind of go for the HTC thing. That being said, you might not have to do PACE in a big lump all at once. You might be able to do PACE in 2 or 3 tranches as you go from building to building, and that may actually end up saving you a little bit of money. In terms of vendors, I mean, I'm of the mind that if you can pay for it, you can find anything. So I have no experience about church windows, but I would have to think that there are vendors in this country who can come up with windows that will meet the historic criteria, but also be energy efficient. I mean, where I live in Boston, there are churches that have been converted to condos, all over the place with those big, beautiful windows. So
yeah, and I used to live in the South End for 21 years. So those were during my tenure as president of my neighborhood association in the South End for that long. So I saw those come up and go, and that was exactly some of the guidance that was going to be helpful for me as I assisted this development team in acquiring and converting this. Boston is certainly a higher price point when you're talking about condos and apartments. So that economics obviously plays into the fact. I don't think people are going to pay $2, $5, $10 million for a condo here in Detroit. I'd like to hope that it gets to that point, but I think we're a long way from getting there yet.
We're going to scrub that from the recording, yeah.
Yeah, but there are church conversions all over the place in all different kinds of markets. So it's not just fancy Boston markets. I mean, there's these conversions get done all over the place. So there has to be a way.
I'd also like to add, thank you for that answer. I'd also like to add that this kind of plays to the sequencing of everything. You really want to make sure that you're talking with SHPO and the people that do historic tax credits, which we can talk about in our next webinar. But because they're really going to be determining what it gets approved through your phase 1, your phase 2, your part 2, of your historic tax credit application, and you want to make sure that anything you're financing it already conforms with that's already part of your application for historic tax credit. So this is where the timing of everything and the sequencing kind of comes into play a little bit more when you're starting to add layers of complexity and multiple sources of revenue for your capital stack. So that's just one thing to consider. It's going to be bespoke, I think, for project. Does anybody else have any other questions they'd like to chime in?
Yeah, this is Sumit here. I'm working on a project actually in Troy. Let me start by saying thank you guys for arranging this and for your time. And the question I have is the most obvious question that I'm sure you get all the time from developers is what's the catch? What are the strings that are attached to this? And what are the administrative burdens that are associated? Because, you know, we all know what that looks like when you're looking at HUD and other different financing sources that can just take a a full-time administrator to manage. So what are the strings here from like prevailing wage, MWBE, and then also administratively the reporting requirements relative to other programs that are out there?
I'm going to speak to just one little piece of that, and then Sarah, I'll let you take some of this too. I don't think there's a catch. What I like about PACE is that there's an energy audit that guides the whole process. So when we connect, you will find an energy auditing firm, and you will show them what you're going to do, and they'll ask you a ton of questions, and you'll provide a lot of information, and they will come up with the audit. And the audit, subject to EIC's approval, will guide what gets done, what's eligible, and all that. So there's no catch. Once the energy audit has been completed and approved, that you're going to know exactly how much you're getting, under what terms, and under what kind of a draw schedule it will come. So I don't know that there's anything about that. I don't think the reporting from our perspective is too burdensome. So yeah, I think it just has to make sense financially. If it's a good cost of capital compared to what the alternatives are, PACE can work pretty well.
And timing?
Well, I mean, timing, to go from beginning to end, can be done in, I want to say like 2 to 3 months. I think we close deals within a couple of months. 3 months is probably more likely.
Wow. Okay.
Yeah, no, John, I think you answered that really well. There's no other, we have to adhere to NYSERDA's guidelines, and from our standpoint, that is actually very helpful because it's very concrete what needs to be done for a project to qualify, and there's no other sort of regulatory process it has to go through.
Right. Okay. I'm working with Noah Shaw, which I know he's mentioned your name to me like at least 10 times, Sarah. So I think we're in good hands.
Great. Glad to hear it.
Thank you, Sumit. Does anybody else have any other questions they'd like to ask the group?
I have another if no one else does.
Go for it, man.
I know that new development is new, as in the policy is new. What I saw one of the slides, I believe you said it was up to 30% of costs and 100% of closing costs, if I recall remembering that correctly. What have you seen by way of new development in terms of what that's gotten up to as a LTC on a deal? Just as a gauge, I know it's all a function of what all is being brought to the table, but what's a good gauge just to think about as sort of putting it in the back of my mind?
So this is John. So what I see more often than not is a 30% loan to cost.
Yep.
But that can be subject to an ask of the EIC or any program administrator. The Preserve project that I showed the slide from in Rhode Island, we actually did that one at 40% loan to cost as an exception. So I think 30% is a good number to begin from.
And just to be 100% clear, it's 30 or 40% is of just the energy related CapEx.
When I take that 30% number, I will take 30% of the total development costs and estimate that as the amount that we can finance. And typically,
wow.
Energy audit will come in around that.
Wow. Okay.
And just to clarify, John, you're talking based on the types of improvements that qualify for CPACE financing, correct? So you're talking about roofs, insulation, excuse me.
Correct.
But so a loose number, similar to what we do with historic tax credits, right? You're just taking a loose number and generalizing 30%.
Correct.
Great, thank you. So if nobody else has any other questions, I'm going to thank everybody. Thank you, Sarah. Thank you, John, so much for joining us and doing this with us. again, I'll put the, I'll make sure that everyone gets a copy of the slides in the deck. And we'll also put the recording of this up on the website. If you have any questions, please don't hesitate to reach out to us. And also, if you have any suggestions for other topics that you'd like covered, they don't have to be real estate development, related, although it's a little bit more my wheelhouse, so I feel always a little bit better covering that. But if it's in terms of small business stuff, we're going to be doing everything, anything that is related to helping small businesses or businesses in general in Troy move forward with information for programming, etc. We're all about it. So thank you so much for joining us. And we look forward to staying in touch as we have more webinar events coming up. So thank you, everybody.
Thank you
Thank
very
you.
much.
Thank you.